I already informed you that I am coming to Dubai and Abu Dhabi in the first week of October. Our meeting in Abu Dhabi is on the 5th of October. Those desires of meeting me in Abu Dhabi on 5th of October may contact the WhatsApp number and the email ID given below. In case you have not already done so, kindly do so at the earliest. There are limited seats.
Hi guys, welcome back to Be Rich. Happy Saturday evening. Before you head out and have your fun, I thought I'll give you a quick update on what's happening with those questions you guys have been asking me on Instagram. You do remember that we have the 52-week challenge group, and in that you guys I've opened up for questions, and you guys had asked me some questions, of course not related to the topic, and some of them I'm answering here, and today and tomorrow. The rest I'll sit and answer on the platform. So here goes. Vignesh Jaibal saying, can you talk about profit loss DVR merger onto regular shares? Well, that profit and loss depends on what your arbitration points were. There's a simple equation, which is the arbitrage equation. The ratio was 10 DVR shares to 7 Tata Motors shares. That is the ratio. So depending on the price you bought it at, you can sit and calculate it out. In terms of the tax component, I will do a video about it as a post analysis, because the merger is already done, allotment has been done, the share is being traded now. So just for a purely conversational and intellectual discussion, I will talk about how the tax was done for this. So going forward, if any other company does this, we can use this as a reference point. But that video, I'll have to sit with Albin on it. And unfortunately, Albin's not given me any time. Once he gives me some time, I'll definitely sit down with him. Lokit has asked, which is the best gold ETF? Well, Lokit, the best gold ETF is the one which has the least charge. I personally buy a Nippon Gold ETF, and that's the one which is my preference. Why is that preferred? Because Anand told me about Nippon first, and I've been sipping into Nippon. Even the Tatas have, so it's completely up to you. All gold ETFs are great, so the choice is up to you. There's no any one which is the best or the worst. Look at the cost. Harshit has asked, what is discounted cash flow evaluation? Does it work for all sectors, and how to calculate it? Well, discounted cash flow, I would suggest you read the little book of valuations by Ashwant Damodaran. That's a fabulous book. He talks extensively in that. And once you've read that book, I'm sure you'll have many more questions, Harshit. Please come and talk to me after that. I'll be more than happy to answer it, because your question is such a long question, I cannot answer it in a few minutes. So my homework to you would be to read that book if you're truly interested in the subject. Saran has asked an interesting question. Still, how much FII funds are in Indian market? Is there any way to check online? Yes, you can go to NSE, BSE website, and all that information is there. Daily, how much FII is selling, DIAs are buying, all that information is there. Your money control will also share with you if you use money control and you like using money control kind of apps. Most of those apps have. You can just enter in Google saying India's FII holdings, and it'll show you lots of places where you can pull up this information. So you can. Right now, Indian DIAs overtaken the FIIs, and historically that's a big shift. That means more Indians are invested in the Indian stock market than foreigners. That's why if you see the foreign influence in our markets have had a shift. Before we used to say the market is going to correct, especially when you see the Japanese market opening positive or negative. We'll say India will also be opening positive or negative. Then we'll be tracking the Singapore Nifty, which now become GIFT Nifty. We'll be tracking that, saying it's going to be positive or negative. All that is now become on the wayside because Indian domestic investors have taken a grip of the market. So FIIs, you can find out the influence they ever had in the market has diminished. So it's interesting to know how much FIIs are holding. And remember, there's difference. There's FDIs and FIIs. FDIs are guys who are investing in India for the long term. FIIs are guys who invest, foreigners who invest in our market, who are looking at, daily trades. Praz is asking, Anand sir is not recommending a small cap stock, right? Why is he recommending NATCO? Well, NATCO is not a small cap according to our metrics. So I do not know why you think NATCO is a small cap. Because from what I can see, NATCO is 25,405 crores. That is nowhere near a small cap. Okay, so I don't know why you think NATCO is a small cap. So maybe if you ask your question further, I can try and answer. But Anand is not recommending it. He's only asking you to consider it if you think it's of value. We see people who want to buy pharma stocks keep asking us, sir, in pharma sector, what can we buy? What can we buy? So then we say, well, looking at the pharma sector, some great companies in pharma sectors, which is your Sun Pharma, which is your Cipla, which is your Dr. Reddy, Zydus, Lupin. All these companies are very expensive. So when you look at that, what looks reasonable to us is Natco. So we're saying, Natco looks good, and we think the owner is pretty good, and the way they're running the company is pretty good, and their balance, meaning their business model, is very good. So we believe in that, and we think as investors we see long-term value. And where the market usually keeps Natco prices, if you look at the PE ratio, it is below that, well below that. So there's an option saying there's a breathing area there, so we thought we can enter it. That's the only reason. If you've been following Natco for some time, you've seen some severe correction from the highs it was at 1,600. It has gone all the way down to 1,300 odd, and then it's corrected today as I'm recording. It's gone back up by almost 3%. Will it stay there and go back to 1,600? I don't know. Maybe. Will it correct all the way down to 900? Maybe. I don't know. Whenever I see an opportunity to sip on it, I sip. Please keep in mind, everything and everything which we say is to keep your risk down and to invest in different coffee ranges. And I can't stress that enough. All of you are asking me, can I take 1 lakh and put it inside, put 5 lakh. I'm not saying please do that. Do never do that. I'm saying even if you have 1 lakh to invest, do it on a daily basis if you want, but sip it. When you see a stock which you like, it's corrected today, at different coffee ranges, sip. Even if you see a massive correction, let's say today you see Tata Motors going down by 5%. You're like, I'm not immediately saying go put all your money into that. Don't. Please don't. Please wait. Sip a few today. Tomorrow it might go down a little more or it might go up. Sip a little more. But keep sipping it. So that way you build confidence and your risk is also understandable. When you see, buy, let's say 2 shares and tomorrow you see it going down by 5% and you start getting a heartburn, then you can't take the risk. A lot of us imagine we can do a risk, A lot of us imagine we can ride a roller coaster. But then when you go sit on top of the roller coaster or on top of the flywheel and you're like, oh my God, it's very high. Oh my God, I can't do this. Can I please exit? So that is what I'm trying to do for you. So when you see 1,000 rupees suddenly becoming 800 rupees, like, oh my God, thank God I didn't put 1 lakh. If you feel that, do not invest in the stock market. Please do not do this. This is not for you. This is for people who are like, okay, I see it going to 800, no problem. I know the owner. I know the business. I understand how it works. I know I'm willing to wait for it, even 1 year for it to go back to 1,000. If you have that kind of a mindset, if you have that kind of a build, then you can look at the stock market. Otherwise, do not enter the stock market at all. That would be my advice. Another person says, it feels like we are going too fast and can't catch it all at once. Well, kind of missed. Take your time. That's why I've slowed it down. I've not posted anything new on the 52-week challenge group. I've kind of paused it there to give everyone a time to sit and go back and read everything. Take your time and read it. And once everyone has some time to digest it, a few days later, I'll open up and say, are we ready to move on? And I'll open up for a vote. And if all of us majority vote that we can move on, I will try and move on at a point of time. But this is why I'm saying I'll wait and let you guys digest all the information I've given you. Okay? So don't worry. I'll slow it down. Arjun is saying, please suggest best way to invest long-term in gold, in sovereign bonds or in gold Bs. I prefer gold Bs, Arjun. There is some issues around sovereign bond. I'll do a separate video on that, talking about it, because quite a few have asked questions, especially after the government has given some clarifications regarding this. So I'll take it up and I'll discuss this with Anand maybe to give you a deeper understanding why and what is happening with that, because a lot of it has got to do with the gold price movement from the initial idea when the bond was launched and how far gold price has moved and where gold price is projected to move. So taking all that into account, I'll talk with him about this and get you a lot more clarity. But if you are investing in gold and you're interested in investing in gold, I would stick to gold Bs, because in ETF, the nice thing is there's no cost. Of course, holding cost, locker cost, which is all true with sovereign bond. But ETF has a lot of flexibility. It's very liquid. Price transparency is there. And I can get rid of it in a pinch if I need to, and I need the money back immediately. Because it's traded in the exchange and it's very easy. As soon as the market opens, I can flush it and take my money back. So I prefer ETF, and all the stuff which you can do, borrow against gold and all that, you can do with the ETF also. So I don't know. So my personal preference is ETF. Even long term, I'd keep it as ETF. A lot of people prefer physical gold because they like doomsday preppers. Some people feel in case something happens, some calamity, and they have to escape, they can take physical gold in their pocket and they can exit the country. I don't know. I'm not a believer of that doomsday prepping. I try and be positive in life and try to keep it positive and light. If things go sideways, I'll figure it out at that point in time. So physical goal I tend to avoid because storing it and keeping track of it is a real pain in my neck. So I'd avoid physical gold. So I would prefer gold Bs. Arjun is asking about Quant Mutual Fund and front running issue. I'm not invested in Quant. So Arjun, I would be careful. I would do the research about this. I would also feel a little nervous, and depends on which funds you have invested in Quant Mutual Fund. Are you invested in their funds, or through them you have invested in other funds? It all depends on that. This front running issue, Anand did speak about it in a video. I suggest you see it. But I usually don't invest in mutual funds, either active or passive, because I prefer investing in stocks directly. But do your research on this. My advice would be that. Nibin Nelson is asking, should I hold my PGInvIT for 10 years or sell it? Well, Nibin, PGInvIT, the strange thing is, if you've seen that video which I did some time ago about why we looked at PGInvIT, it was not that it is a great potential to grow, that was comparable to holding an FD, in the sense that the dividend yield which you were getting from an FD, you were getting better yield because the price of the stock was that low. So we were looking at it purely in that speculation, and that's why, historically speaking, it has moved the price all over the place. From the time it was launched, it went all the way, peaked up to 140, and now it's sitting below at 89. So the reason why we are looking at it was purely for that, because anything below 100, the dividend, if you look at it, you're getting a better return than an FD. So that is the reason we were looking at it. In long-term growth, I don't see any great potential for it. We're looking at purely long-term growth, which is 10 years or more. There are lots of other companies which I would rather be invested in than PGInvIT. It's my personal opinion. So if you want to hold on to it, it's your choice. But I do not know your risk profile. I do not know anything about you. You're just asking me a question. So if it was me, I would rather buy something else if I'm going to hold it for 10 years. So that's it, guys. This is the few questions I managed to do today, Saturday evening. Have a wonderful Saturday. I'll see you again on Sunday evening before the week starts, and I'll try and answer some more questions. Do subscribe to the channel, turn on the bell notification icon, do share it with friends and family, whomsoever might find this content interesting. Thank you again.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.